It's pretty special when a Nova Advisory and OneStream customer is willing to take time out of their day and tell their OneStream CPM customer success story. That's what we have today for you on CPM Customer Success. Tronox is a global materials company whose products show up in more places than most people realize. At its core, the company mines and processes the mineral sands that become titanium dioxide. That's the bright, durable pigments you'll see in paints, plastics, paper, coatings, everyday items we all know and touch. So from extracting ore to producing finished titanium dioxide pigments and specialty titanium chemicals, Tronox manages the entire value chain, operating across 6 continents with thousands of employees. In today's episode, you'll hear how that scale and sophistication shape the finance organization's needs, and why moving to OneStream became such a pivotal part of modernizing how Tronox plans, consolidates, and analyzes its business. You'll hear directly from Tronox's Rob Alleva. Rob cites specific examples of how Tronox overcame their challenges with OneStream and Nova Advisory. From replacing multiple legacy CPM applications, fragmented consolidation processes, and lack of currency translation, Rob covers a wide range of topics. For those with inventory planning challenges or manually intensive balance sheet planning challenges, you'll want to stick around for this entire episode. Before we get started, reminder, if you've not yet checked out or subscribed to the CPM Customer Success newsletter, please do so now. This is full of CPM customer success stories, OneStream news, and information to keep finance and accounting professionals improving their organizations. You can check that out now at Nova Advisory's website, novaadvisory.com/podcast. Enough for me. I'll turn it over to Rob Alleva and Nova Advisory's Tom Foley for the episode. Today, we've got a special CPM Customer Success podcast episode for you. We're focusing on a customer success with Tronox's OneStream journey. So joining us, we have Rob Alleva. Rob is the Director of Finance at Tronox. And also joining us, we have Nova Advisory's Senior Vice President of Delivery, Tom Foley. Welcome, Tom and Rob, to the show.
Hey, Andy, how are you today?
I'm doing great. It's great to have you both. Let's get right into intros. Rob, I'd love it if you would please introduce yourself and your role at Tronox.
Sure. As you said, I'm a director in the corporate controllers group, and I'm essentially, I guess, in a nutshell, the business owner of our OneStream application here at Tronox. So I was originally brought in when we acquired Crystal Metals back in 2019, and we kind of doubled our size. And I guess as we go through the discussion, that'll kind of feed into how important OneStream was to kind of getting through that acquisition and being able to integrate Crystal Metals finance and close process into Tronox's overall process. That kind of led to looking at all of our EPM tools and systems. We did a full system evaluation. We ended up choosing OneStream. We looked at the Oracle Cloud, FCCS, and planning in the cloud, and we were a BPC shop here at Tronox, so we did look at BPC. Interestingly, Crystal was an HFM shop, so they had the traditional HFM on-prem and planning. And so I think Tronox is kind of unique as we went through the process. As you know, we did select OneStream, but we actually replaced SAP BPC and HFM, Oracle, and Hyperion Planning all at the same time. So I think our implementation was a little unique. So that led to our implementation, which I led, and working with Tom and his team. Now it's been about 7 years total since we started the journey. And now, like I said, I'm the business owner, so I'll work with consolidations, corporate accounting, external reporting, tax, treasury, and our FP&A teams to make sure that they're getting what they need out of OneStream. And that's kind of what my role is right now, is just making sure that the application's working properly, and any kind of times we've had changes, and we'll get into the discussion, like our journey with Tom on the planning side and our perpetual planning process. We've changed that a few times as the business has changed, and kind of get into our partnership and how we support our FP&A team.
Awesome. Well, appreciate it, Rob. Looking forward to hearing more about you. You did it all. Sounds like, especially with the acquisition, but we'll touch on that. So, Tom, over to you. If you'd introduce yourself as well, please.
Thanks. Yeah, great journey, great message. So, Tom Foley, as you said, Senior Vice President of Delivery with Nova. My responsibility at Nova is really to oversee all of the service delivery and projects for the company. So that would include project work, like Rob was describing, our managed care, our SMART program, which provides our customers with support, our advisory services. So, as we advise our clients from a financial perspective, as well as the project management office and our center of excellence. So, basically, all things delivery, I'm involved in. I am a functioning and certified one-stream architect, as we'll probably get into later on, and certainly work with a lot of our clients for various reasons and to support our delivery team. So thanks for having
Wonderful.
me.
Yeah, yeah, it's great to have you both. So it'll be a fascinating conversation. This is a great story. So Rob, you've touched on a little bit in your intro. I appreciate that. But let's start at the beginning. So think back, 7 years now, pre OneStream. What was life like for you and your FP&A function at Tronox? Like, what kind of challenges were you experiencing? What were you up against? I think you've
Yeah, so
touched on a few. Yeah.
it's interesting from a Tronox side. Like I said, we had BPC. We had to have multiple models of BPC because we didn't have enough custom dimensions to handle all the dimensionality we needed for the standard financials, plus all the statistical information we collect, our products, product information, and region sold to. So we had a separate statistical model in BPC. So we had to move data around. Our BPC application from the planning side basically had some consolidation logic and some basic translation logic, and everything else was just a load. Massive Excel uploads from our sites, and then just consolidation. FP&A team here might have done some overlays, but basically no drivers. It was done at the entity level. It was only done quarterly, and I would say the one of the big things, and we'll talk about one of our biggest wins with OneStream, had no cash flow logic, so no flow members, no roll forward. So we used to basically do a consolidated cash flow only at the consolidated Tronox level and only quarterly, and that was for both planning and for actuals. So, like I said, one of our biggest wins is now we have all of our cash flow automated in the system at the entity level in local currency, translated to dollars, consolidated the way it's supposed to be under GAAP, and we have that for actuals and planning now. Um, as we talked about, and I mentioned before, how the Crystal Metals acquisition comes into play. Crystal was different. They did have Hyperion planning. They did have some drivers, which we didn't have at Tronox, but they actually only planned at like a regional level. So there was that disconnect, entity level versus regional level, drivers versus no drivers. And so that was kind of one of our biggest challenges as we kind of built out our planning requirements with Tom and his team. So it was a lot of meetings with the sites, the Tronox sites, the Crystal sites, all the corporate functions, commercial, IBP, getting an understanding of kind of how everything input into the current process and how we could automate it within OneStream and streamline the process.
And
As a
just
result,
for
no?
clarity, sorry to cut you off, Rob. The Crystal Metals acquisition, was that on BPC originally, or did you add that after you're already on OneStream?
So that's interesting. So they were a traditional Hyperion shop, all on-prem HFM and planning. We had BPC. Our BPC application didn't have translation in it. We were translating within SAP in our ERP and loading dollars to BPC. So when we first acquired Crystal, from an actual standpoint, we had to basically do three consolidations: the Crystal consolidation in HFM, the what called legacy Tronox consolidation in BPC, and then we'd had to load the dollars from HFM into BPC and then do the Tronox Crystal consolidation. So Once we went live with OneStream, we had one integrated process where all the source ledgers loaded directly to OneStream, all the translation and other logic and rules were all within our OneStream application, both for actuals and planning. So that was a big challenge as well, is just the not having the translation in BPC and them having it in planning. So that was just another challenge in how we figured that out in our new process. And like I said, our process, it was very manual. So like commercial would send out targets to the sites and IBP would send out targets to the sites and then they'd wait around and see once they got all the submissions back from the sites, did they, follow the instructions, were there differences? And then there was a whole process of reconciling, okay, we thought you were going to make X amount of tons. Your forecast says you're going to make Y tons. Why the change? So now our process under the NorthStar process that we built out with Tom, we are perpetual, and we'll kind of get into that. The NorthStar process is a perpetual planning process, but we're also a very integrated process. So our commercial team, they do the worldwide planning for tons sold. And the price per ton down to our product level, our grade level of our product, as well as which regions it's going to be sold into. Our IBP team, they do the tons that are going to be manufactured across our plants. They have optimization system within IBP, and so they'll load that directly to OneStream. Our supply chain team does some assumptions on process chemical costs and some other raw material costs. They're putting their piece in. Um, Tax treasury has their roles. The corporate control, the plant controllers have their roles, and then obviously it all comes up to our global FP&A team that pulls it together, does the consolidation, may have some overlays. So it's a perpetual, but it's a fully integrated, so everyone can see through our workflows that we built out with Tom and his team, the planning workflows at every step of the process from site to site where they're at, and they can see all the inputs from all the other finance teams that are impacting their ultimate forecast or budget.
You touched on quite a few of the issues I wanted to make sure we hit on with your story: disconnected systems, manual processes, manual collection of spreadsheets, and trying to load all that, and even the integration with crystal metals. I don't know, any other challenges you hadn't touched on already that really precluded you and your ability to get to those accurate, timely forecasts?
Yeah, I mean, I think, we touched on the cash flow is a big thing, from an actuals and a planning standpoint. So like I said, now the new process within OneStream has allowed us to go to a monthly forecast process versus quarterly. And we have monthly cash flows now for actuals and for planning. One thing I'll touch on with OneStream, with the whole, instead of having a separate actual application and planning application, we have one integrated system with OneStream, but we have the ability to have different logic and rules by scenario type. So we have our actual scenario type, we have our plan scenario type, and then we have another scenario type for our archive forecast and budgets for reporting. But that allowed us to like leverage about 80% or so of our cash flow logic for actuals and then kind of tailor it for planning, working with Tom and tailor it for our planning process. I think the other thing that we did, which was really cool, on a lot of companies do a really good job of forecasting their P&L, and we did as well. But then kind of there's some disconnects with the balance sheet side of the forecast. So well, we kind of automated a lot of the balance sheet, not all of it, but a lot of the balance sheet process as far as taking items off the P&L. And some things are simple, like amortization, depreciation, amortization of debt issuance costs off the P&L, and then automated the changes on the balance sheet through all the forecast periods, and then also automated that through the flow members and then into the cash flow. So we automated a lot of the balance sheet. As well, we put all of our product recipes into the system down to the product grade. So all of those inputs that we talked about before from IBP, supply chain, and then the corporate controller sites go in and they update their utilization rates across the recipes. And we're able for all of our forecast periods to generate our manufacturing costs for the period. And then we took it a step further and we said, okay, well, we manufactured X amount of tons and the cost is X amount of dollars, but what was the standard price per ton? And what were the variances? And we built logic with Tom and his team to actually put the inventory on the balance sheet at standard, put the inventory variations on the balance sheet, and then through some calculations and other inputs for the forecast, amortize the variations into the forecast into the future months as that inventory is planned to be sold. And then other things too, like lower cost of market and things like that that you might miss in a forecast and or be a late forecast adjustment. We automated that as well into the system.
Wonderful. So I just want to make sure I really have a clear picture on the cash flow challenges you had. So, and even kind of thinking back to the before, I think in a prior conversation, you've told me that Tronox's cash flow process and forecast was quite substantial. It's like 15, 20 days. So what was really the cost to the business when you're operating under that model versus kind of going forward and what
Yeah,
you
and
have
I'm
in
from an actual standpoint, it used to take us probably close to 2 weeks to just generate a cash flow for the 10Q and K. And the
Yep.
corporate team, there was a lot of resources here at corporate just cobbling it together, drilling into the different ERP systems to try to figure out what the FX impact was and what was the real operational impact of changes. And now they spend all their time analyzing the cash flow. We have all integrated roll forwards and through some of our validation rules that we have built into the system as well, we kind of get ahead of those errors every month and spend more of the time doing analysis. Like I said, from a planning standpoint, the corporate team here would cobble together a corporate, like a consolidated balance sheet, and then in Excel they would calculate the cash flow off of that. And now, like I said, in OneStream, we're calculating the cash flow in the system by entity level in the right currencies and just consolidating it. Now, the global FP&A team may have some overlays or adjustments, things like that, but they're not actually spending their time just trying to generate a cash flow.
Love it. All right, let's talk about the partnership that Tronox, created with OneStream and with Nova Advisory. So, Rob, kind of thinking back once again to kind of pre OneStream, when did OneStream actually enter the picture for you in Tronox, and what gave you the confidence that it was the right solution, the right platform to help you tackle the challenges you described?
Yeah, so like I said, our our controller, I worked with him at Avon for about 17 years before he brought me into Tronox, and he was just not happy with the systems here with BPC and how long it was taking to close the books and stuff. So we had done a full evaluation. Like I said, we looked at the Oracle Cloud offering at the time, and we looked at BPC, and we looked at OneStream, and we pretty much eliminated BPC pretty quickly out of the process, and we really did a deep dive between the Oracle Cloud and also OneStream, and a couple of reasons. One, at Avon, we had this traditional Oracle HFM planning. We had an S-based reporting cube and FDM, and then Crystal had it as well. So there was like a very strong already like user base that was comfortable with Hyperion. At the end of the day, we really couldn't get comfortable with FCCS at all at the time. Back then, Oracle was struggling to try to come out with the 4 dimension version of FCCS, and it just didn't give us enough custom dimensions. And at the time, really, Oracle couldn't really come up with any good reference calls for us. OneStream handed us, I mean, kind of dating ourselves, but like a list of 300 customers at the time. They're up into the 1800s now, but they're like, here, call anybody on this list whenever you want. And, so our reference calls with some of the other clients that also Tom had worked on as well, that were OneStream clients and clients of Tom and his team, like that was a big factor in our decision. We looked at like 150 or so specific requirements, like across actuals, planning, and then just kind of general system things, kind of like, things like, how strong is their customer support and, how fast do they respond and things like that. And ultimately, we chose OneStream and very happy with our decision. But it was a very detailed evaluation process, and we went through a lot of specific requirements. And as you can imagine, some of there were some people that wanted to just stick with all SAP because that's what they were comfortable with. There were some that were comfortable with Hyperion and wanted to, stick with Hyperion. But ultimately, we thought OneStream was the best application, and that's what we went with. And we're 5 years into our journey now. We've been live for 5 years now.
Okay. Yeah, appreciate the context in the journey. It sounds like a ton of diligence went into it, and you ended up with the right decision at the end of the process. So I'm going to pull Tom in, back into the conversation. Tom, so Rob described the NorthStar planning methodology, and I know that's you've architected that and been key to the design of that. But can you tell us a bit more about it? Give us some context for what NorthStar is, and then how that helped guide the work we did with Tronox and their transformation with OneStream.
Yeah, sure. Awesome. So North Star, as Rob described, is a perpetual planning driver-based methodology. And we've got a bunch of webinars and things that people can look into. We can provide that reference. But the summary of it is that it addresses what I felt and I feel in the market was a deficiency in how the kind of the FP&A teams went about planning and forecasting. There was always a fervor for starting a planning process and then executing the planning process and then completing the planning process and delivering a plan, to management, only for that plan to be pretty much out of date almost immediately upon it being delivered. So the timeliness of the planning process was a challenge. The kind of start and stop nature of the planning process was a challenge. And then you had always had competing type of activities going on. You might be working on a quarterly forecast, but at the same time, management's looking for a long range plan refresh. They may be looking at a risk and opportunity type of refresh. And you might be starting your annual budgeting process all at the same time. And our clients would be maintaining two, three, four different data sets of plans and trying to keep those things all tied together in order to be able to meet the demand of management and for forecasting what the business is going to look like in the future. So the North Star methodology attacks those items by first making the process a perpetual activity, and people may laugh, but it could be a daily basis aspect. So if you think about the traditional planning process, you had business factors that would pop up. There would be changes in costs for overall supplies. There might be changes in the sales outlook, meaning a bluebird sale came in or a big contract might have been lost. And for examples like that, what you basically had was you had FP&A team members kind of maintaining a little notebook of, these are all the things that I have to remember to put into the plan at the time that we do the next type of plan. With the perpetual planning process, when you know it, you put it into the application. So you get immediate response to the factors that are really governing and impacting the projection of the business in the future, and management gets to see the impact of those things basically immediately, rather than having to wait to the next cycle, right? Now, being able to be more nimble and have the system available to be more nimble was one key factor. The second factor is to get out of the kind of craziness of the start and stop, right? So FP&A teams, cancel all your vacations in September and October, kiss the kids, tell you love the wife and you're never, or the husband, and you're never going to see them until November, because it was just a fervor for doing that. And now with the perpetual aspect and the driver-based concept, which I'll get into, you know, those types of things go away. You know, as you know, the information you get it in, it becomes a daily part of the FP&A business cycle and the you know, the functional teams out in the businesses that as factors that would impact the business and what the performance of the business would be in the future. They have the ability of taking action on those right away. The second combination is that it's a driver-based process. So we look to apply the logic like Rob described. You know, they have a central team for forecasting their sales. That might come from a CRM or other tool, but that information is readily available and maintained regularly. So why not feed that into the system on a more regular basis so that that new information is available. Um, production, you know, production in this particular case, you know, that changes on a regular basis and has a significant impact on the financials of a company. Get that information in, but then balance what gets impacted by those changes. If sales go up or sales go down, cost of goods sold needs to be in lockstep with going up and down. That's going to, you know, if production goes up or down, that's going to impact the overall actual cost of production, and therefore things like the manufacturing variance that Rob mentioned before. Carrying that on the balance sheet and you know, overproducing or predicting that you're going to overproduce certainly has a significant financial impact on the client's financials. So building in those drivers so that the planners are really planning the driver for the process, tons or production, and the ancillary information like the future costs or the relationship between revenue and cost of goods sold, um, production and resource costs are kept in lockstep automatically rather than somebody having to manually via a spreadsheet say, okay, our sales went up, therefore our costs have to go up, or our production is going up, therefore our resource costs are going to go up. Um, Pushing that concept all the way through things like your balance sheet calculations. You know, why manually calculate balance sheet when a lot of that information can be automated so that the minimal amount of information gets fed into the system, but the maximum output is calculated by the system. And having that in place allows you to use those drivers to predict to the end of the year, to the end of next year, or even to a long range plan, say out, you know, say 3 to 5 years, all using the same processes that people do on a day-to-day basis. So they don't have to change their thinking, change their tactic, change their approach, change the level of detail. It ends up being a smoother, regular process. And as a result, the time to produce a forecast is significantly reduced.
Anything, Rob, to kind of add on how that was applied to Tronox?
Yeah, just a couple of points on some of the items that Tom mentioned. On our perpetual main planning scenario in OneStream, it might be locked out to like the broader finance team for maybe 3 to 4 days at you know, during the forecast, so that the global team could kind of absorb all the data and consolidate it, potentially put some overlays in, and then that perpetual, you know, scenario is reopened almost immediately after that. The other thing I'd mention, um, exactly like Tom mentioned, like we are when we get to like August, September, October, we're like just rolling, you know, into the next year, and that's basically like the cuts of the budget. So it's not like we're stopping and doing a separate whole, you know, separate activity to produce the budget. We're using our same perpetual planning process, our same scenario, our same logic and drivers and rules that we have for the monthly process. And we did just this year, as a good example, we actually used that same perpetual planning scenario to do our 5 year plan. And Tom and I are going to do talk probably early this year, but it definitely worked. But probably for a 5 year plan, it was probably a little too detailed.
Yeah.
But we were able to use the system because we don't have a separate strategic planning application right now. But so we were able to leverage that perpetual planning process to do the 5 year plan. But again, for a 5 year plan, it was a lot of detail. So it probably took a
Yeah.
little bit longer than if we kind of did the strategic plan at a little higher level. And then I guess the only other thing I would mention is with the perpetual plan and with having the integrated system with OneStream, our actuals and our budget and forecast data is highly integrated. So every month that there's actuals, we're constantly feeding the new actuals into the perpetual planning scenario, and we always have the freshest actuals, and that integration and consistency between the actuals and the budget and forecast data is definitely there.
Yeah, so I'd like to touch on stakeholders and kind of aligning on those next, Rob. So you've already mentioned that you've reached out to the business, you've got operations, I imagine you've got things like tax and treasury, all kind of contributing to one stream and getting into the one source of the truth. What did it take to get alignment across all those stakeholders for you during the implementation?
Yeah, I think, just seeing what they can get out of one stream made the sale to those groups a little easier. So like you mentioned, tax now they do all the balance sheet and tax provision planning across all the sites. So in the past, same thing with Treasury. Treasury will plan movements in debt, interest expense, some of the derivative expenses, related expenses. And so they know, like when they load the stuff, like when they get the consolidated forecast back, they know they're getting back the amount that they expected. In the old process, they would send out like, a million emails with all different assumptions and then have to wait till it all came back and just check to see if the data was what they expected and what they had originally forecasted. So, and like I said, we worked very closely with Treasury and made sure like we built some custom reports and automated some reports for them to do their debt compliance quarterly and things like that. So just getting them involved in the implementation from day one, understanding their requirements, what they were getting from the old system, maybe some of the pain points in the old system, and how we could help them. I think kind of definitely helped with the adoption across not just consolidations and global FP&A, but across finance as a whole.
Perfect. So you've touched on a few of the complex processes that you transition to one stream, things like inventory deferrals. Tom talked about the manufacturing cost drivers. Do you have any other examples of processes that were, previously kind of a nightmare that you've now made seamless?
Yeah, I don't know about nightmare, but I think just for transparency purposes, one of the things like our challenges, like, we have different entities with different functional currencies, but certain costs are, like, for example, our ore costs across most of the world are derived in dollars. And, with the traditional EPM tool, everybody pretty much plans in their functional currency, but you kind of lose that. And you're able to kind of pull out the translation impact with an EPM tool, but how do you really get to the transaction impact? So, working with Tom, we're leveraging one of our custom dimensions where sites can actually plan in the underlying currency that those transactions are happening. And then the custom logic that we built will convert to their functional, and then that's when the normal translation logic from one stream kicks in. So I think that's one factor, just for not really a complicated process, but more to get more accuracy in the manufacturing cost and the FX impacts. And then, just interestingly enough, like we actually, Treasury came to us after we went live, and we had this process set up for planning, and they were trying to get a handle of like FX exposure worldwide because they didn't have a central repository for that. And that's where we said, okay, well, could we leverage some of the stuff we built for planning? And that's what we're doing now. We're collecting FX exposures, and the sites can, using that same custom dimension for FX, can load certain accounts that we need in their underlying currencies, and then we have some calculations to like convert to what functional currency should be, based on all those inputs, and we compare it to the functional currency actual amount that we loaded from their TB to make sure we have a full population. So, that's like just one example, I think, of where you can really use the leverage OneStream's capability to have very highly complex and custom logic to support your business needs, and then how we kind of leverage what we built for planning to help out treasury, from an actual FX exposure standpoint.
Love it. So you've talked about a lot of wins. we've we've hit on just kind of deprecating the old legacy systems that weren't giving you the information you needed. We've talked about integrating acquisition. We've talked about converting manual processes to automated. Any other kind of immediate wins you saw after implementing
I think
OneStream?
maybe just utilizing that lot, the custom logic and rules, but then also the intercompany dimension in OneStream, which is powerful. Like we're an integrated business, so we own the mines and then we also own the pigment plants. So again, part of the integrated process, IBP plans out all the ore sales, intercompany ore sales from the mines to the pigment plant. So we kind of get that input from IBP, and then the logic that we worked on with Tom and his team actually, does all the intercompany transfers of the ore and the eliminations and everything. As well too, like IBP will plan like any finished goods. If we have finished goods, say in France, and we need to move them to the UK, they'll plan that, and then we have the logic in the system that balances out and makes sure all the intercompanies are eliminating properly, so that the FP&A team is not spending a lot of time trying to figure out huge intercompany differences in the forecast month. So we make sure that as we plan transactions, we plan both sides of them within the forecast and the budget, and keep the intercompanies in alignment.
Perfect. Okay, so Tom, kind of curious about transformation you've seen in the journey that Tronox took. Um, what are some examples maybe you've got with other companies similar journeys? How would you describe the transformation Tronox has achieved as compared to some of your other customers?
It's a good question. Tronox has really embraced and leveraged the platform, as Rob has been describing, throughout our discussion here. That the aspect of just simply closing the books, from a consolidation perspective, is a lot of the journey that some of the other customers have taken so far, but they haven't really embraced the platform and moved into the planning and forecasting side, other than potentially uploading the information. So Tronox is a really great example of embracing the platform, leveraging the capabilities, synchronizing and applying the rules to both the actuals and planning, consistently, so that the output of the information calculated by the platform is very comparable from a level of detail and from a rule basis perspective. So, so I'd have to categorize the Tronic story and comparison is that they've really leveraged the platform. Uh, Not that our other clients, don't potentially plan to, but Tronic's laid out a roadmap in those early days in that selection process, and then once OneStream was selected, and Rob had great insight into laying out a plan for how they were going to leverage the platform, and then moving forward with that plan. And we the end result is that they have a really solid integrated platform for both actuals and for planning and forecasting, that sets them up to do take on the next journey with things like strat planning or risk and opportunity planning, but also they've got a massive repository of information, so the level of detail and the analytic content that's available to their user community is very deep. So most financial or kind of strategic business questions really can be answered by leveraging the OneStream platform to mine the detail. That doesn't happen very often. A lot of times, it's a kind of high level summary, and then to get really into the weeds, you have to dive into foundation systems and go elsewhere. But um, and we spent a bunch of time, talking about level of detail in our journey. We had a war room set up with representation from all the different aspects of the business, and really spent a good amount of time hashing out level of detail that was necessary to be impactful for the business, and balanced with materiality for planning and forecasting as well as actual reporting. So they're a great representation for setting a great foundation, and are able to grow into multiple other items. I'm thinking, even from dashboards and advanced reporting and things like that. They're set up very well for continuing their journey.
Yeah, and I would say transparency is a big thing. Like the power of OneStream being able to drill into any dimension is great. But then we also set up a data type dimension in one of our custom dimensions. So all of those drivers and calculations that and I had mentioned, a lot of them are captured in separate data types in our data type dimension, our UD7. And so we're able to drill into accounts and then even drill further in and see, okay, this was from the IBP load. This was from this calculation. This was from this calculation. So there's a lot of transparency. And then on the actual side, we leverage that data type dimension as well to distinguish between US GAAP and IFRS. So for planning, we do all of our planning in US GAAP, but for actuals, we also have to consolidate IFRS within OneStream as well, and having the ability to um, set up those custom dimensions how you want them, and that's been a really big plus for us as well. That data type dimension helps us with a lot of analysis.
Okay, we talked about a lot of transformation, Rob, and just kind of wrap up maybe this part of the podcast. I'd love any other changes the role of finance has been able to may accomplish with OneStream. What kind of transformation outside of I heard more time to analyze information.
Yeah, and that's kind of like you hear that all the time, but it's so true. And that, we don't need to get into more details, but the cash flow alone, I mean, that saved like weeks of manual work on the actual side and the plan side, and there's a lot more analysis done. Um, Even things like I'll just give a simple example on the actual side. We used to send out a whole separate book of like related party disclosures that we needed to do as part of our controls, and we just added a couple of roll forwards for related party in OneStream and added a couple of certification questions in the actual the actual workflow certification process, and eliminated a whole set of manual submissions in Excel that all the sites had to submit to the global external reporting team. Even things like certain footnote disclosures where they would send it out in Excel and they would have to kind of manually put them all the files together, manually translate them. We kind of collect them now in OneStream and leverage OneStream to do all the translation and aggregation, and they're able to spend more time looking at the data and analyzing it versus just kind of pulling it together so that they could get a footnote finished for the quarter. So that aspect is definitely, part of it. And again, like I mentioned before, the transparency when the auditors have questions or when management has questions, the ability to drill into every dimension, the ability to drill into that data type dimension and figure out exactly where all the data and all the numbers are coming from, how things have changed from one forecast to the next forecast. All that's been, a huge benefit to Tronox.
So, Tom, as you kind of look at the Tronox story, what kind of advice would you give to other finance leaders that they're about to kick off their journey or their transformation? What might they underestimate or overlook?
Um, well, I think we can say from a representation perspective that the aspect of having a cross-functional team contribute to the process is was something that Tronox did very well, and I would recommend that to to all clients. And it's a difficult proposition because you're talking about pulling in leadership or representation of leadership, to talk about what the roadmap would be. But any good output, that you want, particularly out of the one stream, is worth um, is worth having that planning up front. So, um, not looking at it as just being a tool for the office of the controller, for closing the books, or just purely something for planning and forecasting, but truly looking at it from as it's intended to be used as a platform to support both of those principles, and bring those people, and get representation, cross-functional representation into your room from your operations, from your finance, from your FP&A, from tax and treasury, HR, and so that the uh, vision of what the solution will be, even if it's not the immediate first step, but the vision long term of what the platform can do for you is kind of mapped out, so that you're starting the journey with a plan in place and have an eye on the prize for the long term. Um, I think they did that very well. Like I described before, we had a war room situation, and they were sometimes not fun meetings, but they were often very fun meetings because people were excited about what they could do because they were seeing how their area of responsibility was going to be positively impacted by the long range plan, and that generated support for the program as well. So you weren't getting pushback from different areas saying, hey, you're jamming this down my throat, or I'm just being asked to use this and I didn't have input into it. So functional, cross-functional, support from the organization would be key. And the other thing that they did well as well is they did the pre-project training on OneStream. Um, you know, can't say enough about that brief but tangibly positive education for the non one stream knowledgeable, just to even get the lingo and the capabilities and the possibilities for what the platform can do in mind, so that when that cross-functional team was talking about it, they had a basis to say it was possible, right? It was possible to solve that problem with the platform because they were educated briefly, and I think it was a 3-day type of commitment that could be spread out over a week. But that was also something very positive. So we weren't walking into that cross-functional team with naysayers. They kind of came in and be like, yeah, I've just seen that it can do this. Now it's up to us to structure it so that has a maximum positive impact on the company. Those two things, I think, any company, if they do those two things, they're setting themselves up very, very well for a positive project.
Yeah, that's a
Wise
good point.
advice.
We did do that 2-day train the project team training, and it definitely helps in the design process. Because unless you have a decent basic understanding of what the application to do can do, you're not going to know how to design it to its full extent of its capabilities.
Yeah, so let's kind of wrap up. I want to talk advice you might offer, Rob, kind of similar to the question I posed to Tom. So for other finance leaders that might be listening in, maybe they're still stuck in some of the manual processes or dealing with an integration of another acquisition or legacy systems. What kind of advice would you offer to them? Where would you recommend that they start?
Yeah, I think talking to other OneStream customers, and talking to customers of the implementation partner that you're thinking about using, I think that's key. just seeing what their challenges were, what their big wins were, and that definitely helps. As it gives you a comfort level that you're making the right decisions, but then also kind of gives you a good foundation of what pain points possibly could be during the project and where you're going to spend more of your time than you think, because that's always a big thing too, planning the project properly, making sure you have the right amount of resources. Here, one of the big challenges that we never mentioned is we were going through the integration of a major acquisition and a lot of finance resources working on that and all the purchase accounting all at the same time we were implementing the system. So I wouldn't recommend that if you can help it. And I think, to the other thing, we did planning and actuals at the same time and we made it work. You could do one or the other, first or second, but honestly, like, you really need to get both teams involved if you're going to do just an actuals implementation and thinking planning down the road or vice versa. There's got to be a good, at least overall understanding, because the system is very flexible, but you don't want to go back and kind of revisit like a lot of design decisions and major decisions on dimensionality and things. Like, I'll give you one example, and it came through some of our discussions with Tom and our design discussions. We go down for planning down to our grade level. So we have our product, our grade, and then our SKU. So everyone at the time said, we want to just plan to the grade level, not all the way down to the SKU level. But we built the hooks into the system in our dimensionality that we could go back and go down to the SKU level if we want to in the future. So I guess in a nutshell, just thinking about short term, medium term, and long term, and just making sure you don't lock yourself into certain things up front. And when you're gonna go through that design process, and again, making sure the actuals and the planning people are aligned as best as possible up front.
Love it. Well, any closing thoughts or parting words of wisdom either of you would like to offer?
Yeah, I mean, I guess just our partnership with OneStream is still very tight with our sales rep and our product manager, and then our relationship with our implementation partner. Because again, our planning journey, it's kind of developed, and we just had a change last year that we worked with Tom and his team on again, like on the sale of in the forecast of purchase finished goods, and the business kind of changed, and we had to kind of look at our planning process and adjust some of the logic and rules to kind of support the change in the business on, the sale of intercompany finished goods. And then Tom doesn't know, but we have another kind of small change that we're going to talk about. So, I guess that's really the partnership. The business is going to change, and so that perpetual plan and some of your drivers need to be flexible and to be able to change as the business changes, as the business grows. So, I think that's kind of like a key thing, is just that relationship and that communication. And like 7 years in, I can pick up the phone and call Tom, and that's not the case with every consulting firm you know, where you can just pick up and talk to the partner directly. And sometimes Tom's working on our account directly on some logic, but most of the time it's like he understands our process and he knows who within his team is the right person to get to us. And that's a key too, is like when there is a change or when there is an issue or something, is getting it working together and getting it fixed quickly so we're not disrupting the business.
Well, I think that is a wrap. I really appreciate, Rob, Tom, your wisdom, your stories. I think they'll get our customers, our listeners will get a ton of value from this conversation. So thanks so much.
Yep. Thank
Very
you.
welcome. Glad to
Bye.
help.
Thanks for joining us for this episode of CPM Customer Success. Reminder to check out the CPM Customer Success weekly email newsletter to stay informed of the latest CPM Customer Success episodes and OneStream news. You can check that out now at the Nova Advisory website, novaadvisory.com/podcast, and subscribe to the CPM Customer Success Podcast email newsletter today. Thanks again for listening, and I'll catch you next week for another episode of CPM Customer Success.